DraftKings with the ticker DKNG has been in free fall since peaking on September the 9th at 64.18 cents per share to now $22.60 as of today. The question is, will the next earnings report bring a change for the better or could it get worse? Hi folks, it's Björn here. And on Friday, the 18th of February, DraftKings will report their earnings for the fiscal quarter ending December 2021. And in today's video, we will have a short look at the last earnings report and why DKNG tanked after that, followed by what we can expect for this earnings report and if, in my opinion, DraftKings is a buy prior earnings or not. So this video is quite packed, but I encourage you to watch the whole video in order to get the full picture. And if you like informations like this, then please hit the like button and consider maybe even subscribing for more daily updates and infos. But with that out of the way, let's get started. DraftKings has a market cap of 9 billion and a PE ratio of -6.3 as they are not profitable, and a PS ratio, a price to sales ratio of 7.9. Although revenue rose 60% year over year to 230 million in Q3, its losses mounted as well. DraftKings reported that its losses for the quarter were 545 million, or over twice its revenue. Even after adjusting for non-cash expenses and certain other costs, the company Q3 adjusted earnings before interest, taxes, depreciation and amortization (EBITDA) was negative 313.6 million. This is also higher than revenue. Moreover, the past 9 months before the earnings, its ongoing EBITDA loss was 548 million. Most of these losses come from its huge marketing and technology expenses, which I marked in green, and we all know it is important and key to gain market share in the online and in casino gambling arenas if you want to be a big player. So I'm not really worried about these numbers. For example, just have a look at yourself or me. As when we invest, we have to go high risk as well in order to make the first million, right? So if you have already $1 million, after that is easy, or better should I say easier, to make another one. Makes sense, right? But literally spoken, DraftKings is bleeding cash currently and gave a poor outlook for this quarter. And therefore the share price tanked, and because of this we have to look at these important numbers in the upcoming earnings report. Means if they either could increase their revenue or decrease their expenses, to make the analysts and investors less worried. Very important, folks. So now we have a reference. Let's deep dive to the upcoming earnings and see if we can find some information and can therefore maybe already predict the outcome. According to Zacks, expectations are 439.5 million revenue, and 6 analysts estimated a high of 455 million. And low 412 million, means an EPS estimated of minus 0.82. So that are the numbers analysts want to see or hear next Friday. But folks, here comes the if. Even if they beat the analyst expectations and DraftKings gives a poor outlook for the next quarter or for the whole year 2022, which I personally doubt, the stock will tank. So be aware of this as well, please. Knowing this, let's check out some news and find some tools to predict the outcome. Here you can see just some positive news, which of some of these will have a bigger impact than others. For example, November 17th, they partnered up with FaceGlam. If you're not familiar with FaceGlam, they are these big YouTube online content creators and they partner up with them. Facepalm, whenever they make a YouTube video or whenever they make some form of content, there's going to be times when DraftKings is going to show up somewhere. Then they launched sports betting in New York, which is huge, and now in Louisiana. And in my last video, I was talking about the problem with the native tribes. But here we can see positive updates as well, as DraftKings joined forces with the Tulip Tribes in Washington. That's it for the news, but in case you want to check all of them out, I will link the page in the description below. And before I forget it, I won't go into detail for the NFTs, as they are currently not really important in my opinion, and it remains to see if they can produce solid cash. Just a short info though. Jason Robbins, the CEO of DraftKings, is in the board of advisors of Autograph, who basically is behind the NFTs. And I don't say it will not be valuable or profitable in the future. No, don't get me wrong here. I totally think that's the next thing, but the value is defined by rarity, quality, emotions and functions, and that is a complete new and different world here, which has, again, not really a big impact for DraftKings yet. That being said, I always like to have a look prior earnings for companies like DraftKings at the website statistics in order to evaluate, but let me tell you already this. With PayPal, it didn't work as their website visits were great, but the earnings tanked. Anyway, let's have a look. How is it for DraftKings? We can see that for the unreported period, means September to end of December, there was an increase for September, but then declined, and a year-over-year visits are down 14.9%, which, folks, doesn't look really promising. As well for this earnings, the Super Bowl number are not in it, okay? And you can see it is expected that DraftKings won't be profitable before 2024 or 2025, means earliest in 3 years. But on the flip side, have a look at the projected growth rate, folks. That looks, however, quite awesome. For the institutional ownership, this one has decreased, as well as for the insider ownership, which is another factor I do not like to see, to be honest. So now that you have a pretty good overview, let's come to the analyst ratings, my personal opinion and conclusion. So we have 19 ratings with 19 buys, 8 holds and 1 sell rating, with an average price target of $39.50 and 23 being the lowest and 65 the highest price target. And the latest rating was by Jed Kelly from Oppenheimer, and he reiterated with a buy rating and the price target of $35. Well, now you know what the analysts think. Let's come to my humble opinion. First, DraftKings is a fast-growing, innovative company, but the competition, just naming 2 here, FanDuel or Penn, ain't sleeping. Second, and what worries me the most, is that they probably won't be profitable the next 3 years. So they are far away from being profitable. And with the current market situation stepping away from growth and entering value, I believe DraftKings will have a really hard time this year and will be highly volatile. Hence, as we can't know or predict the earnings outcome, but we know what happened to PayPal or Firm, meaning the market being really rough. If you just miss or lower your forecast just a tiny bit, the stock will go down, and by down I mean a lot. So I give here a hold rating, but I do hope that they will beat the analyst expectations, as that would be a good indicator for PaySafe as well. And they have their earnings March the 2nd. And prior, I will do a pre-earnings video for them as well. But write me in the comments below what you think, how the earnings will go, as this would be quite interesting for me and the community. That being said, if you liked the video, please give it a thumbs up so other retail investors like you and me have the chance to see this video as well, as dang algorithm likes the stuff. And if you're on my channel for the first time, I would be happy if you would subscribe, because I regularly produce new videos and tutorials on the topics of stock analysis, investment and financial products, to give you the opportunity to take your finances in your own hands. That being said, if you like the content and you want to support my channel with a few bucks so I can produce more videos, I will pin the link to my Patreon page in the comments below. That's it for today. Thanks for watching, and as always, stay focused and don't be greedy. See you next time.